Shockwaves being felt across the economy this week after a rough Monday on Wall Street, then followed by today's big interest rate hike from the Fed. That rate hike will impact broad swaths of the economy, from mortgage rates to even your credit card bill. Here to break down what this will look like is Chief Financial Architect for Reyes Financial Architecture, David Reyes. First of all, I'm glad you're here with us on the 4.
Thank you.
Let's just jump right into this, because I know I have a lot of questions about it. I'm sure our viewers are concerned about this. What does this rate hike do? Because this was more than a lot of people assumed it probably would be.
Yeah, you know, they were talking 50 basis points, and their little story that was leaked by the Wall Street Journal. I guess the Fed's leaked to the Wall Street Journal they were going to maybe go 75 basis points. So, you know, basically the federal funds rate, which is what is used as the mechanism to raise rates, basically doubled, went from 0.75 to basically 1.5%. So really that affects credit card rates. Mortgage rates have already kind of front run this, now going from rates in the 3% range of 6 months ago to over 6% today. I mean, the average home to acquire a home today is up 50% relative to the payment that's required to buy the same house you could have bought 6 months ago.
Right. So when we look at the reason for this, again, it's to perhaps stop a recession from happening. But in your professional opinion, are we already headed in that direction? Is the train going too far down the tracks and it's going to be tough to turn this thing around?
Unfortunately, I would say yes. I would say the odds are greater than 50% that we'll probably have a recession. We already had basically a negative GDP print for the first quarter. We had you know, a negative quarter-over-quarter change. The projections for certain insiders is a flat GDP for the next quarter. Really, a definition of a recession is 2 negative quarters of GDP. So the risk the Fed runs in front-loading interest rate hikes like they are right now is really kind of crashing the economy, and they're worried about that. I mean, with the war going on, supply chain issues, all these other things that we have to deal with, it doesn't help.
So what should the average person do? Somebody who might have money in a retirement account, maybe you own a home, perhaps you were looking to buy, perhaps sell. What do you do? What do you suggest the average Joe out there do besides be worried?
Yeah, exactly. Besides talking off the ledge, right? Yeah. You know, doing this for a long time. I mean, you know, part of it is the fact that if you're going to buy you're looking to buy a house, I would definitely do a timeout right now for sure. I mean, with rates going from 3 to 6 in that short of a time frame, the affordability has gotten out of hand. Also, you're also seeing price reductions start. I think Compass Realty, which is a publicly traded real estate firm, one of the biggest in the country, I think they just announced 10% reduction in their staff. And, you know, so those are the good news maybe, is that prices may come down, looking at it from a positive perspective. And once the economy does slow and federal funds rates start going down, which may be a year or two from now, but maybe between the fact that rates fall eventually and housing prices come down, that could be maybe a silver lining down the road. But right now, I think it's just kind of buckle up and maybe take a second look at your retirement plan. And I would say one thing, bonds have been a big killer. A lot of people have lost a lot of money in the bond market. That's one piece of advice I would give. Look at the bond portfolio you have. It's one of the worst asset classes to be in when you have rising inflation and interest rates. So that's one big kind of tip I would give to people for sure.
Yeah, this is important information. I hope you'll come back and continue this conversation, because really it's trying to figure out what's going to happen next. And we can't look to any particular point in history and say we've been through this before, because we sort of have all these different pieces of the puzzle working kind of against us at this point.
Unfortunately, yes.
All right, David Reyes, we appreciate your expertise on this topic.
Thank you.
All right, Carly.